Hi everyone, I am Muhammad Rehan, founder and the trader of WealthTalkClub. I'm not selling this course, just giving it for free 100%. If you want to trade with me, learn faster, or grow in the right environment, the Discord is where it happens. Find the link in the description below.
This is our first lesson, candlestick analysis, in which I will talk about different types of candles, colors of candles, and what does each type of candle represent. I'm starting this course from very basic, where anyone without having any prior knowledge to crypto or trading will be able to master the markets by the end of this course, and you will fully understand how these market moves. Let's jump on to the lesson. So before I tell you about the candlestick, let me tell you about the trading. What is actually trading? Trading is actually a battle between buyers and sellers. So whoever is going to be more in the market is going to move in that direction. So let's talk about candlestick. A candlestick represents a battle between buyers, bulls, and sellers in a time frame. There are four price components of a candle. One is a high, open, close, and low. A candlestick consists of a body and an upper lower shadow wick. These thin lines at the bottom and at the top of this candle are called wicks. The wick shows the coin's highest and lowest traded price, while the body represents the difference between open and closed prices. A candle with a lower closing than opening is red, while a higher closing is green. So if we look at the example here, we have got two candles. One is green, one is red. Green is representing there are buyers in the market. Red is representing there are sellers in the market. When the candle started, this was the opening price. Let's say the price was at $2. When the candle started, price went up to $3. Sellers came in, they pushed the price below $1 right here. But before the close of this candle, buyers pushed the price back up and closed near to $1. So opening price was $2, closing price is $1, but it went down below 1 and also it went up above $2 at certain time frame. If you look at the green candle, the candle started at $1. Sellers came in, they pushed the price down below $1, but buyers came in, they pushed the price back up to around $4. But before closing the candle, sellers came in and they closed the candle at $3. Now, if we look at these candles, there are wicks towards upside and wicks towards downside. What does it mean? What's the meaning of the wick? If the wick is towards upside, it means there are sellers in the market at certain price area. If there is a wick towards downside, it represent buying pressure, means there are buyers at this certain price area. So if the wick is towards upside, sellers in the market. If the wick is toward downside, buyers in the market. Now, if the candle started at $2 and closed at $1, which means the starting price of the candle was at $2 and it closed below that price, it will show the color red. While if the starting price of the candle was at $1, but it closed above $1, which is $2, it will show the color green. Green means bullish candle, red means bearish candles. Let's talk about bullish and bearish candlesticks. Bullish green candlestick shows upward market movement while bearish red candlesticks indicates a downward movement. The body size reflect the magnitude of price changes within the given time. Large bodies with a small wick suggest market control by a specific group. Smaller wicks indicates low volatility while larger wicks signify higher volatility and traders indecision. Now, this red candle, what we call bearish candle, this green candle, what we call bullish candle. When you find a candle with a solid body, if it's red in color, it's bearish candle. With a solid body, if it's green in color, that's a bullish candle. Remember, every candle tells a story. What does it mean? It means when we look at the candlestick, that tells us a story what's actually happening in the market at the certain time frame. So if we look at this candlestick, what we are seeing at the moment and what we are understanding, okay, so the price started at $2. Sellers came in, they pushed the price down at certain price. Buyers came in, they pushed the price back up. But this solid red body is representing after the close that there were a lot of sellers in the market. When the candle started, the price was at $2. When the candle closed, the price was at $1. It means there were a lot of sellers at the certain time frame, and the candle closed with a solid red body. Now we call it a bearish candle. The story is just told us at the certain time frame there were a lot of sellers in the market. Similar to this, if you look at the green candle, when the price started, it was at $2. Buyers came in, they pushed the price up somewhere around here. Sellers came in, they pushed the price back down. But once the candle closed, there was a solid body, green body towards upside. What it's representing? It's called a bullish candle. What story it's telling us? The story is telling us at the certain time frame or the certain price, there were a lot of buyers. They pushed the price towards the upside until the candle closed. Once the candle is closed, we have got a very strong bullish candle, and the story we got from that at a certain time frame, there were buying momentum in the market. When we look at the bearish candle, sellers in the market. We look at the bullish candle, buyers in the market. Now let's head to the lesson and talk about of different candles.